All right. Good morning, everybody. Economic data came out in the Asian session that surprised to the downside. Horrible economic numbers. China cut rate hike by 10 basis points, trying to shore up liquidity after that horrible economic data. It didn't do much to help out the markets. So we've seen a significant sell-off in gold and oil and a spike in the dollar. Not quite sure how much more contagion we're going to see from that, but it's certainly one of the most pertinent pieces of information on the day. If anything could or would affect our market, that's going to be the biggest one on the docket right now. The 210 is still inverted. On our own docket today, we have Waller at 1050. We've got a lot of manufacturing data. And then we have additional auctions today. Now, these additional auctions are a big part of how I gauge or approach the afternoon trading session. I know they're never really covered anywhere, but to me, they're a very large part of what's going on. And whenever we have these additional auctions, I pay particular attention to the idea that we may not get our normal pause at lunch the way that we normally would. So like we usually do with the morning briefing, we want to look at what happened around the world and really think about any long-term news stories, right? Anything that could last longer or turn into something a lot worse than what it is starting out to be right now. And the example that I usually give is when that ship got stuck in the canal and then it turned into this really big ordeal, right? And what's going on over in China does tie into a housing story. It's been going on for a long time too, and then it also connects to their lockdown, which greatly affected their production and manufacturing. It's just all across the board, right? These are not new stories. It's been a continuing theme, and if you're going to approach JD and Baba Baidu, right? There's a lot of China names out there that had not necessarily started to rally per se, but really had started to build a reasonably decent base. It's been um, even this morning on Bloomberg, they had yet again somebody talking about buying tech, and it was U.S. tech and China tech. Well, when you get reactions like this, if you're going to try to do that, approach with caution, right? It's more than just what you see in the technical analysis within the candles. 8:15, 8:30, 10 o'clock, 11:30. The additional auctions today, there is not a 1 o'clock auction. A lot of times there is not today, though. So by 4:30, or excuse me, by 11:30, we're pretty much good to go. Right? We shouldn't have anything really standing in the way other than any additional Fed speakers that might show up. You can see that we had one Fed speaker already on the docket for the day. We certainly could get another one. So we want to be prepared for the idea that that can happen. You know, when they list the Fed speakers here on finance juice, it's because they were registered in advance to show up at a particular place, right? It could be a luncheon, a dinner, it could be just showing up on CNBC. But at any time, they can just pop into a network, and any network that they do that to is obviously going to let them on, right? We've seen that before when the SPX had hit that 20% low, right? So continue to watch the news through the morning. You're looking for anything on this that starts to say that somebody's out there talking, and it could be, European central bankers, Fed speakers. The president's been doing a lot of talking that's been showing up on there lately. So seems like every other day, that he's out having a speech about something, including the chip sector. It's been, front and center quite a bit. All right, we hit a major level on Friday. And when we squeezed through it onto the other side, the market went into a short squeeze and just exploded to the upside. Well, that kind of leaves a little bit of a liquidity vacuum behind. So, we automatically assumed that there was going to be a little bit of a pullback at the very least, like a Busby play, right? That when you get to a resistance level and you fail to break through it, you fail to break through it, you fail to break through it, then you finally do break through it, price very often will pull back and test that old resistance as a new support level. I call that a Busby. Technically speaking, we got that Busby. It lines up on the daily pivot, but it also lines up on Thursday's intraday high. Not to the tick, but same kind of zone. Why that's such a big level? You go out onto the SPX and even into things like Apple. Say go out, look at the bigger picture from the COVID lows to the year-to-date highs. That's a 786 pullback that we hit on Friday. We hit it on Thursday and pulled back. We hit it on Friday and broke through it and got into that squeeze. Now we have that as a major support level, and it really needs to hold. All right, so as every day, we can maintain the range, break to the upside, or break to the downside. It's always the three things on the docket, right? It's one of those three. Well, yesterday was a very large expansion day. So the base case argument is that we're going to stay inside of yesterday's range. It makes sense because even if we're bearish, we're very likely not going to get, burned down the house bearish. And we would see weakness kind of bouncing us through these lower pivots, but we would still expect the market to stabilize and not really exceed its expected move. The 21 ADR is 68.50. It's about $1. It's about 1.6%, and that puts us down to 42.08. That's the bottom of yesterday. So we line up perfectly on that. To get there, we would have to break the weekly pivot point, the daily pivot point, half the ADR, the Globex open, the cash open from Friday. So there's all these pivot points that we would anticipate hitting on the way down, right? And even that would be considered mildly bearish, not even really all that bearish at all. Fading down a little bit is almost considered a healthy thing to do at this point, right? You don't want to get too extreme. And when we have that question, have we traveled too far? Have we gone too far too fast? Using something like the 10-day or the 10-week moving average is a really great way to be able to gauge that question. Think of the 10-week as the mean, right? It's the average price of the market, the center of the basketball court. When you get too far away from the mean, the market very often will pause there, consolidate, and or pull back towards the mean again. Well, what's too far? Too far in Tesla would be completely different than too far in, say, X Steel or GM or Ford. So every market has that limit that it gets to, that distance from the 10 where it decides, okay, enough's enough. We're going to pause here and hold the line. So I built this indicator to help us gauge that question. Right? All it's doing is asking, how far away from the 10 are we? And then what's the average distance we get from the 10 before we start to pause or turn around? And on the ES, that happens to be 3% to the upside. When we get more than 3% away from the 10-day moving average, the market tends to pause there and consolidate and or pull back again. We're at 1.85, right? So we're not there. We have not, quote, moved too far too fast. That 2.7 reading where my mouse is at, that was Friday. So Friday, we got close to that 3%. And here we are Sunday night, Monday morning, and we've pulled back. But until the market opens, right, I wouldn't count today's yet. Either way, we still haven't moved too far too fast. While we're here on the daily, it's worth noting that we are above the year-to-date anchored VWAP, which is the cyan line that we got running across the screen. And the weekly expected move doesn't seem to be much changed from the previous week's expected move. So the market makers aren't pricing in really any extreme volatility, but they're not taking any out either. Right, so our weekly expected move is indicating a continuation of the same kind of volatility as the previous week, but each week our ADR is shrinking more and more. The volatility is going down. If you think about volatility as a nerd word for movement, right? The movement on a day-to-day basis is decreasing. Someone says the audio sounds messed up. I don't know if anybody else is having audio issues. I haven't made any changes to my audio system, so it should sound pretty normal. Am I? Darn it. See, last week I had to go to a different stream product, and that's why we weren't streaming on BB last week. Things have just, this restream is not working at all. When I try to use it on Chrome crashes completely. Right now I'm not even using Chrome because every time you try to run restream on Chrome, it just breaks it. Which is why I do everything on the Zoom, because at least on the Zoom it gets a very clear recording, and I can upload the recording to YouTube afterwards. But that kind of defeats the purpose of streaming it live on YouTube. So if What a great way to start the week. Yeah, I bet that's the issue. It's gonna kill the it's gonna kill the restream when I do that though. Well, I'll probably just have to upload the Zoom recording afterwards since I know that the Zoom has a good audio.